Dear all, it's a great pleasure and it's a great honor to welcome you all today for this session on innovation for financial inclusion. On behalf of the United Nations Development Programme Office in Geneva, I would like to thank our partners, thanks to whom this session is possible, Orange, Seedstars, and Bamboo Capital Partners. It's now my pleasure to introduce and to welcome on stage Ms. Sarah Djari, who's going to moderate the session. Sarah is Investment Director at Responsability. Thank you. I wish you all a great session. Thank you very much.
Okay, good morning, everyone. We're going to hear 4 entrepreneurs today in the FinTech session. 2 of them are providing nano loans in Nigeria. One of them is providing a saving product, which is not that usual, starting with Mexico, and on his way to also provide credit. And the first entrepreneur we're going to welcome, Omar, is offering a unique interface for merchants so that they can accept all sorts of payment. So I'm going to start with just a word on Omar and Omar's business, rather. So Omar created InTouch in 2014, I think, but he's a serial entrepreneur. He's already started his first company out of college, then an incubator and also a fund. Just to give you a few numbers to let Omar tell you the story of his company, he is operating today in 7 countries. He's already connected 8,000 merchants, has 1 million euro of transaction per day through these merchants, over 50 to 60,000 transactions per day, and is expecting to close 2018 with 4 million euros revenue. Up to you, Omar.
Merci. Thank you, Sarah. Good morning, everybody. I want to thank, first of all, Orange for allowing us to be here. As Sarah said, I launched my company in 2014, and launched my product in November 2015. But why did I launch the product Touch? As you may know, 70% of Africans do not have bank account, so we don't have the same problems that than Europe when we deal about financing, savings, etc. At the same time, we have mobile phones that have increased a lot in Africa. You have more than 700,000 mobile phones in Africa. In this context, of course, the mobile money has grown very quickly. We're talking about today 500 million euros per day of transaction using mobile money in Africa. And it is growing at a percentage rate of 26% each year. Something which is very important to know is that for mobile money, you have the merchants are key on the process. Why the merchants? Because I don't know if you are all familiar with mobile money, but how it works is that you can go to a merchant. It can be a small shop, a retailer, it can be a pharmacy, etc. You give only your phone number and your ID card, and they open an account for you. So they are not opened via the service provider. The accounts are opened by any shop, any merchant, and 58% of these transactions related to mobile money are done through these merchants. Why? Because if you want to put money on your account, you go to any shop, any retailer, and give money, and he puts the money on your account. If you need your money, you can go in any shop and take your money out of your account. And when you have the money in your account, you can transfer money to anybody or go to a gas station or any shop and pay. So 58% of these 500 million euros a day are done through these shops. But what problem are they facing? You have, in this context, many players, many service providers in a country like Senegal, in which we started. You have at least 15 players related to mobile money, 3 for mobile money, at least 10 for money transfer, others on bill payments, etc., etc. So what does it mean for the merchant? The merchant has to sign something like 15 contracts. With each player, he will get one device, at least. For example, with Orange will give you 3 devices. One device for cash in and cash out, another device to accept the payment, and a third device to be able to sell airtime. You have 3 players like Orange in Senegal. After you have Djari, this is which is in remittance, money transfer. You have MoneyGram, you have Western Union. Everyone is coming and will set up a program on either your smartphone or your PC. Very difficult to manage. So imagine 15 players, you have 15 login, 15 password. So usually they write it on a paper, which is a big gap of security. If you have problem with Orange, you call Orange. If you have problem with MTN, you call MTN. If you have problem with Tigo, you call Tigo. And these solutions are prepaid ones. What does it mean? For the merchants to be able to accept a cash-in from an end consumer, a cash-in of 1,000 euro or 1,000 francs, he must have stored on his own account 1,000 francs. The operations are prepaid by the merchant. So each morning, he goes to the bank of Orange, put money, go to the bank of MTN, go to the bank of Djari, etc., etc. So his stock is very difficult to manage. So what did we do? We worked with all these players and developed a solution that is integrated to all service providers related to mobile money, money transfer, bill payment, phone credit, insurance, and ticketing. What does it mean for the merchants? It means that instead of signing 15 contracts now, he signs 1 contract. When he faces a problem with Orange, MTN, etc., instead of calling MTN Orange, he calls InTouch. He has only 1 account. What does it mean? If he has to put money on 1 account to be able to provide services to the end consumers, he just put money on Touch account. And it makes his life much easier. So today, we succeeded to launch, as Sarah said, 7 countries. We started from Senegal. Our major countries are Ivory Coast and Mali. In Senegal, we have something like 6,000 merchants. In Mali, we have 1,000. In Ivory Coast, 1,000. And you have the other merchants in the other countries. We're processing today more than 60,000 transactions per day, which represents 1 million euros per day. Our aim is to cover by 2022 38 countries. We already have signed a contract with Total Gas Station, which is covering all these countries. We have already set up the solutions in 7 countries with Total. Next year, we'll launch 15 new countries by July 2019. And our aim is to reach 155 million euros revenues by 2022. Today, we're making 2.3 million euros revenues. With Senegal, we launched the other countries this year. We plan to make 4 to 5 million euros revenues this year. And hopefully, with the launch of the new countries, we'll be able to increase this revenue. I would just like to finish saying that we already did our first fundraising. We could raise 7.1 million euros in 2017. We are planning to raise 15 to 20 million euros by mid-2019. And with a valuation of around 80 to 100 million euros. Thank you.
Let's jump to questions. Okay, while you're thinking about your questions, I have one. Would you mind, Omar, telling us what is your revenue model and what are your main costs?
Our revenue model is based on transactions. What that it means is that on each transaction, we are paid back either by the service provider or either by the end consumer. Usually we are around 0.5 to 3% depending on the service. So the main costs are related to the platform. We succeeded to set up a very secure platform hosted by Atos that became later on one of our shareholders. The other shareholder is now Total Group, Total Africa. And so the main cost is related to the hosting of this platform and the development of the solutions. We have some 50 developers that are involved on a daily basis on the development of the platform, and these are one of the main costs. The other cost is related to the sales. In a country like Senegal, we have 60% who go and try to meet all the merchants, signing contracts and helping them when they face problems. So this is another cost which is a bit high for us.
Understood. Any questions in the audience?
How big can it go? How big? We want to cover these 38 countries by 2022. 150 million euros, as I said. After that, we were planning to look after other markets, but we did not start working on that yet. Maybe in Asia and all emerging markets, we think that they will have things to do for us.
Can you elaborate a bit on the social impact of your product?
Sorry?
Can you elaborate a bit on the social impact of your product?
Yeah, what we are doing is that, as you should know, today mobile money is becoming the most important things for bankerize people in Africa. But the problem is that the merchants don't want to use that, want to enable that if they don't have enough profitability. And for the profitability, they need many services. They have to manage many services at the same time. We had been in some areas we are working with the UN, for example, in a program they called UNCDF in Senegal. And we're going in areas where service providers don't go at all. And in these markets, when we've set up our solution, people need to work on, to jump on the trees to be able to make transactions just because the coverage of the telco is very low. So what we're doing is trying to bring these services everywhere to make these financial services available everywhere. This could not be done before, and we can show you some movies on that in which we'll see that with our solution, we are covering areas that help people that were doing so many kilometers a day just to receive money or to send the money or just to be able to pay their bills, etc. Our solution allows them to do that because we are everywhere, and it makes sense to merchants to use it.
Okay, we have time for one more question. And if not, I'm going to ask it. You've mentioned that 58% of transactions today happen at the merchant or require the merchant's help, and that's why you're equipping the merchant. We also, looking forward, we also can think that will reduce this amount of cash transaction or merchant-supported transaction will reduce, and therefore maybe the importance of the merchant will reduce. How do you integrate that into making sure that your business doesn't slow down?
Yeah, looking at the figures of GSMA, we know that in 2025, the amount of transactions going through the merchants, instead of being 58%, will be 25%. But the size of the market will still grow. And when we're talking about the volume, it will grow around 20 to 30%. So what we're doing, we are following the transactions, because the transaction will move from the merchants to those who cash in the system. To explain better is that today, to do your cash-in, you go to the merchant and you give him the money, so they put money on your account. What is happening is that governments, companies, etc., start themselves to pay salaries using mobile money. But for that, they need solutions like ours, because you have so many players that they cannot connect with Orange, connect with MTN, connect with Tigo. So they connect once with us. They give us a file, and we can distribute on all the networks so that the salaries can be distributed through mobile money, through money transfer, etc. So this will change the way people do cash in. At the same time, banks are trying to set up solutions. They are giving to their clients some apps, and from these apps, the clients will be able to pay their bills, electricity, water, etc. They will be able to cash in their mobile money account, etc., etc. We are providing APIs to these banks so that they integrate our solution to help their customers be able to do all the operations using our solution. And the thing is that our business model is that we'll still be paid on each transaction. So we are following the transaction. Our vision is to say we want to be the reliable partner for each transaction made in the digital finance system.
Super, thank you, Omar. For those who need to or want to speak to Omar further, he's an Orange partner, and therefore you will find him later on in the day at the Orange booth. Super.
Thank you.
And we're moving to our second company, who's an on-balance sheet lender in Nigeria. So I'm inviting Charlie from Seedstars on stage. Charlie is representing today InvoizPAID because the CEO could not make it, unfortunately. Just to give you a few numbers, InvoizPAID in Nigeria was started 2.5 years ago. They have $1 million of gross loan portfolio. They have disbursed today about 400 loans for $4 million of value. And they have about 20% repeat clients. They offer 2 products, and Charlie will tell us more.
Thank you very much, Sarah. So yeah, unfortunately, Ben, the CEO, couldn't be here today. And normally I sit where you guys sit and watch entrepreneurs pitch. And there's a lot of entrepreneurs who have been through Seedstars, so CowTribe, AgroCenta. So this is your chance to actually grill me rather than it being the other way around. But I'll try and do InvoizPAID justice. So InvoizPAID is a product in Nigeria providing fast, reliable credit to SMEs. We're targeting the missing middle, the segment where our sweet spot is about $5,000 to $20,000 loans, where it's too small for banks. Banks don't target this sector because it's the same amount of work for them to underwrite a $20,000 loan as it is a $100,000 or $200,000 loan. MFIs are focused on the micro businesses, loans generally less than $1,000. So this is really where we're in. It's a large market. We have about an estimated credit gap of $20 billion. And although there are over 30 million MSMEs in Nigeria, we're targeting about 150,000 of them. The solution that we've developed combines tech with a niche-by-niche strategy. What that means is that we seek out a niche and access to alternative data to underwrite and credit score the SMEs with which we work. To give you an example, the first segment we've targeted was the online merchants, and we've collaborated with the largest e-commerce player in Africa, Jumia, to access their their sales history. That's the alternative data that we can use for online merchants to score and underwrite the loans. The other segment we're focused on right now is FMCG distributors. And again, here we partner with large FMCG groups to access their purchasing data from their distributors. So using these data, machine learning algorithms, we're able to underwrite and credit score without collateral, which is typically what banks ask for. As Sarah said, we started back in early 2017. We've underwritten about 400 loans. We're growing at over 20% each month. Currently, the portfolio quality is excellent, so our PAR 90 is actually about 0.26%. And we've done all this with relatively little equity investment, about 200,000. So we know how to spend our dollars wisely. The business model that we have is, as I said, underwriting and on-balance sheet lending. So we're doing loans in the sweet spot of about $5,000 to $20,000. The tenor is about 6 to 12 months, giving us a decent recurring revenue over that period of 6 to 12 months. Depending on the credit capacity of the SMEs, we offer loans with around 3 to 5% monthly interest rates. As we're a non-balance sheet lender, obviously we need to source credit to on-lend. And so for the lenders that we're working with so far, mainly Seedstars and several high net worths in Nigeria, we have to offer them an attractive fixed income product. What that is a high yield product with diversification, given that we're underwriting several hundred customers, and relative liquidity because of the 6 to 12 month loans, but obviously they're being repaid on a monthly basis. The team at InvoizPAID is really first class. Ben, who sadly couldn't be here today, is in my opinion one of the leaders and one of the experts in the SME underwriting industry. And his team is really composed of two profiles. Some of them, like Robert, the CEO, come from more of the tech industry. So he's worked with Rocket Internet and Compare Group Europe, so really growing tech companies. On the other hand, they have a team on the operations side who have come from the lending industry. So Lukman, Nolish, and Daniel, who've been with companies like Lapo, Access Bank, and so forth, which I'm sure many of you are familiar with. Recently, we added Christian Speckert as the board member and advisor, who Sarah probably knows very well, previously with Responsability. And I really think with this team, InvoizPAID are ready for the next step. What that needs is access to funding. So we're currently raising 1.5 million in equity and about 7.5 million in debt. We need that combination of equity and debt, obviously. To raise more debt, we need to capitalize, which is why we're needing the equity. We're hopefully going to raise this in the next 6 months from impact investors, VCs, and DFIs. I imagine some of you in this room. We're going to be here all day, so happy to talk if you'd like to know more. We really believe we can deliver a return on investment for the investors, but also targeting the SME sector, which generates over 50% of the GDP in Nigeria, have a sustainable impact for such an important sector of the economy. Thanks very much, everybody.
Let's go with the questions. Maybe a mic over there.
So I have a little cheeky question, which relates to the real impact of the business. If you've got a portfolio of risk of less than 0.5%, yet you're charging interest rates of annual interest rates in excess of 50%, you generating excess equity returns, yet your ultimate clients are paying very, very high rates for the default probability that they are part of. How do you explain that from an impact point of view? Someone might look at it and say, you're ripping off MSMEs.
It's a very good question. So, I mean, we've been in this for 2 years. We have to start somewhere. The interest rates for repeat customers are declining, so that's the goal, is to bring them down. We're currently positioned, at the market rates or lower. We don't want to go in, we don't have the firepower at this stage to go in and really cut the prices. So we need that profit for us to be able to reinvest in our growth. Definitely in the long term, bringing down the interest rates is part of the mission, and we'd like to do that.
Another question?
Sure. So from on the equity side, we're looking to raise it an 8 million pre-money valuation. On the debt side, obviously it's not valuation based, but we're looking to raise or to offer interest rates of about 8% in USD for the lenders.
I have a question. You're taking all the hard work on yourself to discover the credit risk, and we've just had a comment on the attractivity of those borrowers given their low credit risk. How are you tackling the risk of those borrowers once their credit risk is discovered and once they've been through 1 to 3 loan cycles and have a digital track record? How are you facing the risk that they might be poached by other lenders? And Nigeria and SME lending platforms are going well hand in hand, and I've spoken at least to 20 platforms in the past month who are looking at Nigeria. How are you going to survive?
So, I mean, I think in the end, the access to credit will become somewhat of a commodity. So in the end, it's definitely going to be the service that you can provide more than the interest rates. I think that's the commodity part of it. And the service for us comes down to a lot of it is about the technology. So right now, we're integrated with Jumia, with the e-commerce platform, making the whole payment process, the reimbursement by, for some it's with the FMCGs, it's more by direct debit. With the e-commerce platforms, it's directly integrated. So just making it a simplified process for them and tech-driven, essentially, I think is the way we can do that. Competition for me, it's definitely going to be there, but the market is large enough for multiple players. The $20 billion credit gap, we can't do it all ourselves. So in some respects, we do welcome competition, and I think we're going to focus on that niche by niche strategy. Right now it's e-commerce merchants and FMCG, but it'll grow as we develop.
Thank you. Do we have time for another question? Yes, we do. Maybe then a mic.
Two, maybe. There is a number in between 15% and 80% on the...
For the lenders.
Yes, for the lenders. Why gap so huge between both 15 to 80?
So the gentleman next to you really hit on the actual number. It's around 50 to 60%. That's, I mean, given that we have a 3 to 5% monthly interest rate on an annualized basis, that's what it is. Yeah. The difference from the lender's perspective, which is the slide you're referring to, comes from whether or not they're lending to us in dollars or local currency, the cost of hedging and so forth. So that's where the range from 15 to 80 comes.
Well, thank you very much. My question is in line with the two gentlemen in the front row there, in the middle. Thank you. It's nice to make a try. What do you have to do to lower that interest rate for the lenders?
I mean, I think it's just time. Getting more data, doing this for more years, and really understanding where the risks can lie and how to minimize them. So it's right now, I would say, we've experimented a lot. We've learned a lot of lessons about what generates a good portfolio at risk. But the more we do, the more sectors we can add on. Right now it's really just focused on 2 sectors and 2 sets primarily of data, but then also the psychometric testing and the physical checks that we're doing. But the more we can do, the more data points we have, the better the algorithm will become and the lower we can make the rates. So really I think it's just time. Right now, I mean, with the 200,000 we've had, the loan book is still relatively small, 400 loans. It's an excellent start, but yeah, it's really just time.
Thank you, Charlie. For those who want to continue the conversation, you'll find Charlie at the Seedstars booth.
Thank you.
And so comes our third entrepreneur, Luis Rodriguez, who's also an on-balance sheet lender, also in Nigeria, and also a Seedstars vetted entrepreneur. Luis launched his company a few years ago. He currently has 20,000 borrowers, with some of them that have taken up to 30 loans. He's disbursed so far $2.2 million with only 250,000 equity. And he has currently 150,000 loan book. I leave it to you, Luis.
Thank you very much. Good morning, everyone. My name is Luis. I'm the CTO of QuickCheck. And before I talk about my product, and this is a consumer-facing product, I think it's interesting for you to look at that there are almost 20,000 people that took the work of going to an app store, clicking in 3 places and saying that they love the app. Loving like you load is a very typical Nigerian expression that it means love is like anything else. And it shows what we are doing and how we are helping all these people. I don't want to bore you too much with numbers. Some of you are Impactiverse, so some of you know very well all of these numbers. So there's just a simple slide that shows you the opportunity that we have here in Nigeria. And it's for 5.2 billion for the underbanked that are not serviced by the current banking system of this country. This country has 186 million inhabitants with a bit more than 30 million bank accounts right now. And the opportunity across Africa is huge. Why are we targeting the underbanked and not the unbanked? It's very simple. The unbanked, to have a meaningful impact, will take so much more work than the underbanked. And anyway, the underbanked needs services. The banks are not lending to people without collateral, or the banks are not lending at all, except for big businesses. So somebody needs to tackle this. Somebody needs to help these people have access to financial services and bring them into the financial system. What are we doing? It's an app that leverages non-traditional data. Non-traditional data meaning things like contacts, your SMSs, where you're located. So for example, if at night you're in an area and during the day you're in another area, this means that you have a stable life, and a stable life leads to better credit risk. The way that your phone is charged or not charged with electricity means that you live in an area that has electricity. If you have electricity, potentially you have more resources. How you top up your phone, again, a proxy for capacity to pay. If you top up your phone often, maybe you don't have enough money to top up your phone. If you top up your phone once a month, means you have enough disposable income to be able to pay a loan. So all of this, we leverage on all this data, and this data creates a credit score. With this credit score, we're able to disburse loans in minutes to our customers and help them have access to funding that simply is not available in the market in any of the players, and the traditional banking players. Where are we and what have we been doing? So we started end of 2016, and we started doing fully automated origination and underwriting and processes in 2017. And what we wanted to do was first build a technology. How are we going to bring this? Is it possible to do it? After the technology, channels. Where are we going to acquire consumers? We're not going to go in the street and acquire consumers. I will never acquire those 20,000 customers you have now going on the street and doing brick and mortar operations. We acquire from Facebook. It's not visible, but the LTV versus CAC is 3.7 currently. And we proved, basically, that we can bring people into this financial system. We have people that have more than 30 loans, which we know how they behave. This is a person that we can give them a credit card. This is a person where we can give them higher value loans that simply this person did not have access before because the bank would not give to him. So the plan, and moving forward, we're going to scale up the platform. And our objective by 2022 is to have 1 million people financially included into this platform, and obviously sharing all this data with the other players on the market, because at the end it's about sharing and bringing people into the platform, into this platform, to financial inclusion. Where are we and what have we been doing? We have 185,000 downloads from Google Play Store, and as I mentioned before, 4.5 stars, which represents the quality of service we deliver to our customers. We have had 412,000 loan applications, which represents 20,000 consumers, more or less, almost, and we disbursed 2.2 million in loans over the last 1.5 years. We're talking about a business that we've built to these numbers with just $250 in equity invested in. And this traction represents the loan book that we could have had right now with the customers that we have using our app every day, but we are limited by a current loan book of 150K. The model is very simple. We give loans, we give micro loans at short-term intervals with no collaterals, fast disbursement. Why short-term loans? Because it's easier as they rotate faster as a way to understand how people behave. And from there, we bring them to medium-term and longer-term loans because we already know how they're going to behave and how they're going to pay. Financials, we're doing a bit more currently of 23,000 USD per month in revenues, and we have a deployed loan book of 150K. And the default rate is very interesting if you compare to other players on the market. We have an aggregated portfolio default, so par 90 for me, of less than 10%. And on our good customer, on our power users, meaning users with more than 7 loans and are recurring in the platform, we are at 3% default rate. Competition. This is very important. It's very interesting how the market has been evolving. We started in looking at the market in September 2016, and then from there building the whole technology. We have a first mover advantage. We know the market in Nigeria. We have our own proprietary technology, proprietary algorithms, credit scoring, and the platform itself. And we own fully the credit, the internal credit recovery system, which is not the case for most of these competitors that I have shown there. We forecast to reach 1 million in loan book within the next 36 months and break-even point at 20 months with a month-over-month of 10% on our users. So who is building this? I have a master's in artificial intelligence. I worked at CERN before. Salo, it's our head of data science that worked in banking in Dominican Republic. Fabiano, that has been managing businesses at IBM and Swisscom, and Shinea, that manages our operations on the ground. How much are we raising? We're raising 10 million to grow the team for a 24-month runway and 18 months of loan book. So this is split of 55% of debt, and the rest is equity to grow the business. And thank you very much.
Let's move to the questions.
I'll start off with another cheeky question. How do you pursue defaults? What's the process that the client who's defaulted goes through?
Sorry, can you please?
Pursuing defaults, credit claims.
Mm-hmm. Okay, so there are many things we can talk about here. Let's start about why people pay. And people pay because there's a very interesting human characteristic called loss aversion. The thing that is more annoying for us as humans is that we hate losing things. We don't like, when we get something, it's cool, but if you lose it, it's very bad. So the whole process is gamified, meaning that if you don't pay, you know that you're going to lose access to the level where you were before in the system. So this is one way that you control. Then there's nudges, as someone before was presenting this interesting bot. We have something very similar. So we have a set of automated processes that remind you that you should pay. It's not about, most of the time it's about you need to remember that you need to pay. You want to pay, but you forget. You know, the world is complicated. So we remind all these people via SMSs, via push notifications, and via IVR, automated calls, that they need to pay. Then finally, if they go overdue, we have a call center that calls them and explains them what are the disadvantages. So you lose access in this gamified process. You're going to be reported to the credit bureau. And this makes a huge chunk of people pay. Finally, they will default, right? And at that point, these defaulting loans, they go into an agency that can recover them, and it counts as extra revenues for us because they already defaulted. Does that answer your question?
Not really. I was just trying to find out at what point do you kind of interest rates charging, and on an average default. It's a question we can deal about later. Yeah, what is the interest portion on an average loan that's defaulted? Is it much greater than the capital loan owed?
I'm not sure if I understand your question. So
we'll talk about it later. Not
okay.
We had at least 2 other questions.
Thank you very much for the great project. And just one question. In the beginning, you mentioned a certain number of mobile phone subscribers. Do you keep track of how many of these are women, and if women can easily subscribe to a mobile phone as much as a man? Because to me, in Canada, I could not subscribe to a mobile phone if I had no salary. Yes, believe me, Canada. So nobody could have built a consumer credit scores on my profile.
Okay, so Africa is very interesting in the sense that it has been growing a lot. And to subscribe to it, so you're not subscribe, by the way, it's very important. You top up, right? So you go into an MTN shop, for example, you register, they give you a card, and you're done. So it's not really a subscription in the sense that you have to have a subscription, which I understand maybe in some countries it makes it difficult. I don't understand why, but I could think about it. Here, let's top up. So they buy a card and they have access. What they need is, well, thumbprints to register in the biometric system that is done for everybody in Nigeria.
It's mainly prepaid in Africa, so the risk of the telco is very minimal.
Even our consumers, they're more or less split between men and women. So men and women, salary workers versus self-employed. So we don't limit at all. And by the way, if you look at MFIs, we know that women are better repayers than men in all these markets. So I would prefer, actually, honestly, on the business sense, to have even more women because the risk is a lot lower.
Do you include that in your credit score?
Not really. we are very conscious of using data and the type of data that we use. So, yeah. Although some FI is actually included, by the way.
Unfortunately, those who still have questions will have to find Louis at the Seedstars booth.
Thank you very much.
Our fourth entrepreneur is coming from Mexico, Rafa, who's founded Alibre in 2012, who's decided to offer an entirely different product. He's been looking at the savings product for consumers. Up to you, Rafa.
Thank you, Sarah. And I'd like to thank all the entrepreneurs that came before. It's great to see the projects. Let's see, where should I go? It's great to see the projects that are happening and they're growing. As Sarah mentioned, I'm taking a bit of a different approach, but I do want to collect a few things that my colleagues have mentioned, my fintech colleagues. I love this network. So Omar mentioned the challenge of facing the challenge of faced when you do on-the-ground implementations. We understood that from him. Charlie mentioned the missing middle. And Luis mentioned, where you saw in some of those numbers, great numbers, by the way, a 10% loan approval, loan application approval rating, 3% default rate, which is lower due to this loss aversion. So these are all really good points that I'm going to pick up during my presentation. So, Ahorro Libre, and my name is Rafa. Nice to meet you all. Thanks for having me. We believe in financial service for everyone, which is a bottom-up approach to financial inclusion. And what the reason why we really like this mission is because even though it's not explicitly an SDG, it does cut across most of them. It enables most SDGs. So let's start with informal finance. And I spent about 8 months in undercover in the field in Tijuana, Mexico, where I'm from. And I participated in these types of community products. I call them products now. They're informal savings, like a rotating savings and credit association. In Mexico, it's called tandas, but you can find names like susus in Nigeria, and all over the world this is used. There's also the accumulated savings and credit association. And there's something that I can only define as crowd recouping, which I'm happy to explain during the Q&A or later. But these three pillars products that are informal products that have been used by billions of people for generations, these serve their needs of savings, credit, and funding. So a definition to keep in mind, we're talking about small transactions between peers with no float. Okay, so we like to call it quantum finance because this is the world of really small transactions and small savings, where the logic of Western world finance breaks down. You really cannot apply it. And I have hundreds of examples. I can speak for hours about why that is, and I'm happy to do that. We also call it between peer finance because it's an evolution, it's a decentralized form of peer-to-peer finance. There is no intermediary, there is no float. The business model does not depend on having a float and making interest on it somewhere else. So that makes transparency really high, social accountability, default risks really, really, really low, and the friction costs lower. So, and hence, you have to be innovative to use technology to be able to offer these services without ever touching 1 peso of our users or holding it of our users' money. So how do we do it? We basically provide the technology so they can go from what you see on the left, which is the way you manage a Rosca, or the way someone manages a professional in Tijuana that I found had 450 people on her service, right? And she manages it this way, right? And so this is one way of managing it, and on the right you see now, that's the version from 2 years ago. It looks nicer now. So you can imagine that even though it's hard to get people on our platforms because they recognize what a Rosca is and or an ASCA, but they don't know how it's going to work. Once they do, then it's very hard for them to imagine ever going back. So we've digitalized these products, which makes them transparent, which makes them much more secure, trackable, traceable, tracking. And then also, very important topic, you can now save with your friends and family no matter where they are in Mexico in this particular case, which increases the trust of the circle, right? So much more efficient, of course. That has allowed us to create this organic, positive credit score. It's not about what they haven't paid in the past, it's about what they are able to pay at a regular basis, right? And we have that information, and that also there's not a lot of bias or moral hazard and adverse selection that you find in this data. So in the first phase of the model, we've built these 3 products. We're allowing people to move to a formal version of them. We're creating this credit score, which then allows us to offer them access to third-party, because we're not a bank, we're not a lender, right? Third-party financial services. So we've already piloted the first direct loans that a partner gave through our platform. They happen to have done it 4 to 5 times cheaper than the next available product, bricks and mortar product. So the users were really happy. So far there hasn't been any default on those loans that we started giving out in February through our partner. This is where we focus. We focus on the middle, the bottom half of the middle, and the top 2/3 of the low. That's what we mean by LMI segment. However, we do realize that this is not usually the case for markets like Mexico and other emerging markets. Fintechs tend to be pushed or forced to shift upwards to create more profit and hence sustainability. So one of the challenges that we all face is critical LMI mass for us, and we're doing it by subsidizing our first ROSCA cycle, and then people then realize that the 6 to 8% that it costs them is a lot better than the 9 to 20% that it costs them to move money inefficiently face-to-face. And then there's an industry-wide cooperation challenge, which is the only way to get Juanita from unbanked or underbanked to fully financially included is to create a sort of a financial inclusion ladder and think about her customer journey as she needs different products as she matures financially. And there's no single fintech in Mexico or in the market that is able to offer everything. So we're working with partner fintechs to then say, from a Juanita perspective, we can offer the different value chain, right? And something we just started doing with that is setting up a foundation so that we can work with proven fintechs to create a platform that delivers situation-specific solutions to Juanita, right? And there's a shared business model that creates sustainability. That, in turn, leads to financial literacy and inclusion. The biggest challenge that we already faced was building a great team. This is the few first people that we have, but we've got about 10 people more that don't fit on the slide, right? First come, first serve. So thank you very much. Questions, and look forward to interesting questions.
I'll take the benefit to ask the first question. You've said, Rafa, that you create a positive credit score for your savers. You've also mentioned that now you've piloted a loan product. What is the advantage that your savers get through this positive credit score when you provide a loan?
So over the last 2 years, I've spoken to about, I want to say 20, 30 of the couple hundred bricks and mortar lenders that you find in Mexico. And it took me a long time to find one that was willing to pilot, because one of my requests was, if I'm going to allow you to lend to my users, it has to be at least half of the current rate you're charging, right? And a lot of them didn't believe that this was going to work. And so I explained that the rationale is that there aren't any loan origination, loan placement, loan servicing, and loan collection costs anymore, because my platform does everything. And then the information that we have has never really been used as a risk algorithm, because we have the information of what place of the ROSCA you prefer and how people invite you and how well you pay. And so they trusted, this particular partner trusted, and started with $50,000, I think, at 2,000 peso loans, right? And so far, we've gone past 200,000 of these loans, and there's been no default, perfect payment. And so now they're like, I want to do 2 million pesos, I want to do more. And they're like, well, you have to grow slowly. But yeah, so the benefit everyone gets is users get lower rate. The lender, so far, the default rate that we calculated on tanda payments, on Rasca payments, is about 0.01%. That's between themselves, right, because they owe each other, right? And we're expecting that maybe there'll be 0.5% default rate on the loan once we grow it, right? Because of what Luis mentioned, this loss aversion. If they don't pay their loan to our partner, they lose access to their Rasca, their ASCA, and all their other products that they have on our platform.
Superb. Another question?
Yeah.
Quick question. Everybody else ended on asking for money? Yeah. What are you asking?
We raised a round, which is now 90% already in the bank. So we're not aching for money right now. We'd rather have, number one, in-country partners, because we don't expect to take this to Africa and the rest ourselves. We expect to work with great entrepreneurs like the one I see here. I want to talk to, I'm already scheduled to talk to Luis, and I want to talk to Omar and stuff and say, like, do you guys want to take what we've done and do it in your country? Because it took us 4 years to connect all the PSPs in Mexico, and I'm not going to go through that in the various different countries. So we'll find partners that want to take this and just run with it, because the goal is financial inclusion. And so that's the first thing we're looking for. And then, of course, anybody, there's still a little bit part of our equity round that's available if there's strategic investors. So we're looking for investors that, not so much for the money, but that can open access to retail networks, to banking networks, to payment service provider networks, of course in Mexico, other countries in Latin America, and Africa, etc. So that's what we're looking for.
Super. So you can continue the conversation with Rafa at the Bamboo Capital booth.
Muchas gracias.
Thank you.